opportunity with gold. All right, let's move forward. Let's talk about stock market, and we're going to look at US 100 index, which represents 100 biggest companies in the US. So stock markets generally do not like uncertainty. So when geopolitical risk increases, investors become cautious, and that often leads to selling pressure. So over the past 2.5 weeks, we've seen volatility in equity markets. And that makes sense because businesses, investments, and economic outlook all become uncertain during conflict. So now again, this creates opportunity because if the situation improves, stock markets can recover very quickly. So the key here is not panic. The key is preparation, understanding where the market is now and where it could go next. So let me show you how the market reacted on it. So if you look here, the market started to go down, right, since the conflict started from $25,434 for one share. It gone down to $24, as you may see, up until here, $24,352. So we can say that the Nasdaq 100 dropped down by about $1,000 in value. So let's say when the conflict eases, right, what you can do about that, how you can take advantage of that. So let's say you want to buy it once the conflict goes down and you want to go there, let's say to buy 10 shares. So to buy 10 shares, you would need $4,871 in order for you to buy that much, as you may see here. Okay, and that is again because of your leverage, okay, 1 to 50. So you need 50 times less than the actual price of the share. Not 25,000 you need, but you need about, let's say, $4,600 or something for one share, right? With your leverage though. Now, when you trade that much, and let's say that the price of Nasdaq goes back to where it was. And as we said, it was at 25,450. So it was $25,450, $1,000 higher. So imagine investing now $4,872, buying 10 shares will potentially give you an opportunity of making $10,000 back in return. So you're about just to double your investment should you go and trade that much. Okay, so this is the opportunity that you have with the stock market. So you trade Nasdaq, you can see that. Now, if you look at Nasdaq on the longer scale, you see it's down like this. But if you look at this, let's say on the 12-monthly chart, you understand the trend of the Nasdaq, which will create for you. Let me just put it like that. Okay, right, 12 months. Sorry, I should put monthly, so that you can see 1 month. Yeah, like that. So if you look at Nasdaq, okay, and the Nasdaq monthly movements, you see TradingView allows me to see it only that way. Okay, let me put it that way. So this is monthly chart on Nasdaq. I just want you to pay attention how this index is performing since April 2015. So in the last, let's say 10 years, 11 years, you see this index keeps going up. It keeps going up without stopping. It stops from time to time. You see these drop downs, they actually represent the timing in the world when something big happens, let's say financial crisis, or 2022 when the war started with Ukraine and Russia. Okay, we see COVID over here, right? That's in 2020, see that drop down. And now we can see that the market came to 26,000, and that was in the beginning of the year, in January, 26,000. Since then, it keeps going down for 2 months. So 2 months it's down. But if you look at previously, every single time this index goes down, it creates an opportunity to buy the dip later. And after it actually goes down, right, it skyrockets and brings the new record high. So if you're willing to invest, let's say in the stock market, this might be a good opportunity for you to consider to buy the dip should this conflict start easing and more certainty comes back to the market. So investors are going to shift their interest back again to equities and back again to the stock market. And like I said, the potential of making 900% return is still there. So this is just quickly about the stock market, just for you to have an idea, the opportunity is there. Let's move forward, and now we're going to talk about the Forex market.